Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's the Thursday morning and markets are bracing for a big impact, which is, it's the Thursday morning and right now we can see it's the penultimate day of the session. And we have the Nifty weekly options expiry today. So it looks like a very quiet start for the Thursday. GIFT Nifty, if we look at, it's mildly indicating at a higher start. And even if we look at the pre-open rates, that is also looking at a very, muted start, but however in the positive territory. Now, we did have a heavy news flow day back in a couple of sessions. We did see US-China trade deal fructifying, FTA agreements. There were some geopolitical tensions, but the ceasefire is maintaining for the 5th straight day. So we are brushing aside all of those and we are back into a good and a positive foot at this point of time. But if you look at the global screen, that also looks a little bit mixed and a quiet day for the global markets. US markets have ended on a mixed note overnight, and if you look at the Asian markets, that have opened positively on a higher note as well. So yes, so to say, very quiet start, but not a heavy news flow day that is coming across today. So yes, so we'll watch out for this. But coming back to home, it is the fag end of the earnings season, so we'll be watching out for a couple of earnings which is taking place today. Some of the stocks which will be reacting to its March quarter performance: Eicher Motors, which came out with an inline performance, that will be reacting to its Q4 results. Tata Power also, we'll be watching out for the stock as well. Also, we'll be taking your stock related queries, so keep posting them on our live feed and we'll take them up shortly as well. For now, let's quickly take a look at the top headlines this hour. Wall Street ends mixed. The S&P 500 edged deeper into the positive territory for the year. Nasdaq rises, AI and chip stocks rise, but Dow ends lower for the second straight session. This comes on the back of Treasury yields rising higher as much as mid-Feb. Asian markets have opened largely lower as investors assess US and China trade developments. The GIFT Nifty is indicating a marginally positive start for our own markets. Crude oil prices ease as US crude inventories rise unexpectedly last week, prompting concerns of oversupply. Gold prices fall to a 5-week low as trade optimism rises. In key earnings, Eicher Motors had a largely inline set of numbers. Profit rose 27% from last year and revenues increased by 23% year on year. All right, if you look at from yesterday how the markets have reacted, some of the cues that we'll be watching out today as well, like I was mentioning about the Q4 earnings results which will be taking place today. We have your LIC Housing, JSW Energy, which will be reporting its Q4 numbers. Apart from that, Eicher Motors, Tata Power, all of these stocks will be reacting to its Q4 results as well. How yesterday's session panned out? Well, markets did end largely in the green. However, it was a very quiet day for the markets yesterday also. We saw profit booking at the day's higher levels as well, and we ended positively in the territory also. Buying continued in the broader end of the market, so mid-cap and small-cap indices, both of them exhibited strong trends for the second straight session as well. Mid-cap index particularly, and of course small-cap also outperformed the benchmarks as well. If you look at the defense theme, the buying interest continues there as well. Yesterday we saw majority of the defense stocks rising up to a 15% or so. All of them. HAL also reported its good set of results, so we'll be watching out for that as well. India VIX, that continued to cool off, down about 5% or so, and Bank Nifty, however, it underperformed in yesterday's trading session, down about 150 points or so, ended at about 801 levels. Coming to some of the cues that we'll be watching out in today's trade setup. First up in your screen is your FII flows data. They have returned to be as the buying, they've returned to their buying journey, and they bought around stocks which was worth about 931 crore rupees in the cash markets. On the other hand, DIIs stay as buyers and they bought about stocks which is worth about 316 crore rupees in the cash markets. On the other hand, if you look at the option cues data, the Nifty put call ratio rose about 0.89 levels from about 0.85 levels in the previous session. So that came also as a positive territory. On the other hand, if you look at the F&O ban list, one new stock which was added in the F&O ban, that is your Hindustan Copper, and the stock which continued to be a part of the F&O ban, that includes the likes of CDSL and Manappuram Finance. So yes, all in all, a good trade setup that we'll be watching out for. Now, just a couple of minutes before we go to the open, But let's look at the pre-open rates. Sensex very flat in the green at this point of time, and Nifty also above that 24,650 mark. So it's testing that 24,700 odd levels in the pre-open as well. Now, before let's quickly get on board with our technical expert of the show. Joining me is Kunal Rambhia, market expert. Kunal, good morning. So good to have you. Very quiet session we saw yesterday. Today also we're expecting a very mild start, but 25,000 levels, that is a key watch out for investors and traders ahead. What is your opinion? Can we reach there anytime soon?
Good morning, Lovisha. Thanks for having me on the show. So as far as the Nifty is concerned, I think, what we have seen from 7th April low till now has been around 22 trading sessions and indices are up by around 14.5%. In spite of this geopolitical stress which we saw in the recent time, there was not much of a price correction in the market. So I think more or less the trend remains absolutely strong and intact. The positive trend might just continue. But the key levels to watch out for will be 24,400 on the lower side, 24,900 on the higher side. I'm talking about the spot Nifty levels. If Nifty manages to cross about 24,900, I think then 25,200 to 25,250 levels are likely, and that can be the short-term target. Overall trend remains positive, so advisable to buy on dip on the indices.
Okay, all right. We saw that the bank Nifty underperformed yesterday as well. Anything that you're watching out from that space, be it the likes of HDFC or even ICICI Bank for that matter?
So absolutely, what we have seen was the outperformance of Bank Nifty when the Nifty came up from the extreme low levels, and Bank Nifty rose from 49,000 to 56,000. Now that was again in percentage terms almost 14.5%. So I think this mild underperformance is likely to continue. In the entire space, I'm very comfortable with Axis Bank. Reason being that counter is still within sideways consolidation, but higher end of it. The breakout is placed at around 12.15. If HDFC Axis Bank is able to cross that resistance mark of 12.15, then I think we can see the levels of 12.50 to 55 also. So I think Axis Bank is likely to outperform compared to HDFC for now.
Okay, all right. Kunal, yesterday and in the past couple of sessions, we are seeing that Nifty Realty Index is performing quite well. What are you expecting on the charts? Do the charts still reflect optimism going ahead?
Broadly speaking, this entire space was in consolidation, right? So let's just take an example of DLF. This counter was consolidating from February, mid of Feb, and the resistance was placed near 700. This counter is not able to cross it. But right now, most of these counters, including DLF or say Godrej Properties, these counters are near the resistance mark and likely to break out. I'm still not very optimistic about these counters because this consolidation might just continue. We never know. So we'll have to wait for the immediate levels of the previous high to be taken out first. On Godrej Property, the breakout is placed at around 20 to 25. So that's the level to watch out for. On DLF, we have the levels of 700. If these counters manages to cross above the mentioned levels, then I think one can definitely initiate a buy and a new rally can be expected in the entire segment also.
Okay, all right. Let's also talk about FMCG stocks because they're still not playing catch up compared to what other sectors are exhibiting. Kunal, what are you suggesting the near-term prospects hold for the Nifty FMCG counter?
Again, HUL, the counter is, I think the markets have opened, so we can continue the discussion.
Okay. Just, let's look at, first rates which is coming on your screen, which is your Nifty has opened very flat in the green at this point of time, 24,682 levels. That is where Nifty has opened at. If you look at Sensex also, Sensex is right now it's reflecting that it is opened flat in the red at this point of time. So yes, a very quiet start for the markets as we were anticipating also, since the global screen also was very quiet in today's trading session. Asian markets were largely lower, so this comes on the back of that as well. Coming to some of the sectoral indices, let's take a look at how they're performing in the early trade at this point. Nifty IT index after yesterday's session very flat in the green at this point. Nifty metal index also down about 0.1%. In the open session. Yesterday we saw that the Nifty metal index was one of the outperformers and one of the outliers as well. 2% gains that we saw yesterday. So yes, some profit booking is expected on the counter. Let's take a look at the bank Nifty index because that has been underperforming, and today also it has opened very flat in the red at this point, 0.1% cut which is coming in there. Nifty auto index also we saw some good auto numbers which was coming up. Eicher Motors reported its Q4 results which was largely in line with the street estimates, but auto index has opened very with about 0.2% cut or so. If you look at the broader end of the markets, small cap indices still exhibiting strength. 0.2% gains coming in for the small cap indices. Mid caps also flat in the green at this point of time. So all in all, it's a very quiet, mild and a steady market. We'll watch out if there is any extension of the rally in the intraday session as well. Let's look at some of the top gainers and losers at this point of time. Nifty gainers, JSW Steel, Tata Motors, Adani Ports, Titan, all of them mildly in the green and topping the Nifty 50 gainers list at this point of time. On the other hand, if you look at some of the top losers, IndusInd Bank continuing its losing streak with about nearly 2% cut, which is coming in for IndusInd Bank. Eicher Motors also not reacting positively to its Q4 results, 1.3% cut, which is coming in for Eicher Motors. ONGC, HDFC Life, Bajaj Finserv, they are also some of the top losers on the Nifty 50 at this point of time. But talking about Eicher Motors, the company did see that profit jump about 27% year on year, and revenue also rose about 23% year on year. Volumes were good during the quarter. However, we did see that in the operational performance, margins did see a bit of a drag at this point. Kunal, if you look at Eicher Motors after April 21 top, the stock is down about 6% or so. What do you suggest the near-term charts indicate for the counter?
See, absolutely, again, a trending counter from the recent lows of February, which was near 4650, 4700. This counter is consistently making higher top, higher bottom. But, the momentum is always been a challenge on this counter. There are few days where it just picks up and goes up significantly, but otherwise sideways. So from the long-term point of view, I think these levels are very good levels. With the stop of around 5250, one can certainly initiate buy on this. For the momentum traders, I would say wait for the breakout of 5600. Overall trend is absolutely positive. So one can initiate buy near the supports and hold for the upcoming rally on the counter.
Okay. Let's also talk about another stock which reported its March quarter performance, and it is reacting well compared to how we have opened today with about 0.2% gains or so. That is your Tata Power. The company saw that the net profit has risen about 24% year on year, and revenue also rose about very modestly by about 8% year on year. Kunal, however, if you look at the charts, the stock is quite stuck in a range, 350 to 400 mark. That is where it is oscillating. What do you suggest the near term? Do you expect this trend to continue for the time period?
Yeah, absolutely. You rightly mentioned the levels. In fact, if you look at April 24, this counter was near 400 levels. From there, it went up to 480. Decline brought the prices back to 320, and again, it's back to 400. So that earlier support is now acting as a resistance. If the counter manages to cross above 400 levels, I think a new rally is likely on this counter. But otherwise, one has to be cautious. So as of now, I'm very cautious. In fact, today's opening is not sustained. You can see the prices showing some kind of profit booking also. So if the counter manages to close above 400, I think we can see the levels of 425, 430. But otherwise, overall cautious on this counter as of now.
Okay, still cautious on the counter at this point of time. Now let's look at another stock in focus, that is your Brigade Enterprises, because the stock is down about 1% after it reported its March quarterly performance. We saw that the net profit is risen about 20% year on year, and revenue on the other hand, it has fallen about 14.2% on a year on year basis. Kunal, if you look at the stock is attempting to play catch up, but can we expect the December highs soon, or what are you anticipating?
I think a little more time to go on this counter again, because if you look at very minor trend in last 1.5, 2 months, the counter has made higher top, higher bottoms. But if you look at the November 24 highs and present levels, it's clearly making lower top, lower bottom. So it's more like, a wait and watch kind of scenario. If the counter consolidates near 1100 mark and then shows an uptick, then I think I'll shortlist this for the buying opportunity. But otherwise, I'll stay cautious overall on this entire formation.
Okay. Now let's take some viewer queries, because plenty of them have popped up on our screen as well. The first query coming in from Naveen is asking the fresh entry levels for Bharat Electronics. Kunal, any fresh entry levels that you're watching, because the stock has run up quite a bit in the past 1 month as well, 16% uptick or so.
It's a fantastic formation. In fact, I'm very bullish on this counter. But now the counter is trading near the previous highs, and those highs were of July 24. Which was all-time high of 340. And today you can see the counter is hovering near that 340 mark itself. I think there is likely, some kind of profit booking at this levels. If counter manages to close about 350, then with the stop of 325, one can certainly initiate a buy, and the targets can be 400 levels. But otherwise, some kind of profit booking is likely. And if the profit booking is seen, then one should initiate buy near 320 levels. I think that's a good support to watch out for.
Okay, all right. Let's take another viewer query. Naveen is also asking the views on Shriram Finance. Shriram Finance, if you look at the charts right now, Kunal, from 700 levels, it has come down to 647 levels or so. What is your view on the counter? Can we expect some consolidation going ahead?
So in fact, Lovisha, the consolidation is seen since almost a year now. September 24, the counter is near 650 levels itself. That's a mean reversion level, and on the higher side, 730, lower side is 550. So I think more or less sideways consolidation is likely. I will not really be keen to initiate a fresh entry, but because our viewer is already holding it, I would say maintain the stop of 625. If the counter falls below 625, take an exit. Think of reinitiating by near 595 levels, more or less sideways consolidating counter. Nothing wrong in holding from long term because the trend is absolutely intact, but momentum is missing and it might just take a little more time. So, as you rightly mentioned, consolidation is likely. Breakout above 655, 660 zone with the target of 695 then.
Viewer query. Sine is asking the views on Punjab National Bank and Canara Bank, both of the PSU lenders at this point of time. But Canara Bank is clearly an outperformer in the past 1 month, up about 14% or so, whereas PNB has, largely has underperformed the counter. What is your view, Kunal, for both of these lenders at this point of time?
So, Lovisha, today morning itself, we wrote a report on the entire PSU banking space itself, and the three picks were PNB, Bank, and IOB. So, yes, PNB is looking very attractive to me also because of risk-reward ratio. But again, the entire trend is so far negative. The trend is negative, but the risk-reward ratio is extremely favorable. So, if the counter manages to cross above 101 kind of levels, then with the stop of 95, one can start accumulating this counter. I think the momentum will pick up above 105 and the targets can be 115. On Canada Bank, the breakout was already seen 2 days back. In fact, yesterday was a continuation. So with the stop of 101, one can certainly initiate buy on Can Bank. Buy on dip can also be adopted on this stock with the target of 120. And again, if you permit, we can just even speak about IOB.
Okay, all right. You're quite bullish on the PSU lenders then that is coming in. All right, let's move on to another viewer query at this point of time. That is your Deepan Kakar is asking the views on Adani Power and is asking if there is going to be a breakout on the counter as well. Kunal, the stock has been stuck in a range from the past 6 months perspective also. 530 levels, that is where it is trading at this point of time. Anything that you're expecting on the horizon, however?
So as you rightly mentioned, 6 months consolidation, breakout is placed at 585. And you can check out, in fact, this counter attempted the breakout 3 to 4 times in last 6 months, but it was a failure. So I would say wait for the breakout of 590. In fact, we have also placed the alert on our system, which is at 590 itself. If the counter manages to close above 590, then with the stop of 575, one can certainly initiate a buy. And the previous high, which is around 700, swing high, which is at 700, can be the immediate target of this.
Okay, all right. Let's take another viewer query. That is Nitin Shaji is asking the views on Piramal Pharma. He's asking if there is any new entry levels that can be found on the counter. If you look at from February lows, Kunal, the stock is up about 16% or so, but past 6 months charts, it's quite negative from that perspective. What do you expect the horizon holds? Because they have reported a good set of March quarter performance as well.
Certainly, the numbers are very attractive. In fact, but at the same time, as you again correctly mentioned, sideways consolidation. So breakout is at around 235, 240. Now, because the quarter numbers are attractive, even we have shortlisted this counter, but we have decided to initiate buy near 205 zone, which is the support level. So two trades are possible here. First is think of initiating a buy extremely near support, which is 205, or if the counter manages to cross about 235, one can initiate a buy at that level. So keep these two levels in mind and place your trades accordingly. The overall trend is absolutely bullish, and even the numbers are looking attractive on the quarterly numbers. So yes, it's a thumbs up, but be cautious at this level, either 205 or about 235.
Okay, all right, 235 levels that we can watch out for. He's also asking the views on Tilak Nagar, if there is any new entry that we can look upon. Tilak Nagar reacting very positively to its Q4 numbers, up about 11% or so in today's trading session. We saw that the profit is more than doubled as well, and EBITDA is also up by about 62.5% or so. Anything on the counter that you're watching out for? Any levels that you want to point out, Kunal, for the counter?
So again, if our viewer has an access to the chart, he can always check out first. 22nd April, when the counter was up by around 14%. There was a clear breakout. In fact, that same level was retested on 9th of May. And now we have seen the gap of opening happening today. So now at this elevated level, risk reward ratio is unfavorable. The support is placed at 300, which was the recent breakout zone, and today was a gap up. So I would say, let's not chase this counter at the higher end because the risk reward ratio is unfavorable. Let it cool off or otherwise get into a sideways consolidation. As of now, the support is 300. So if counter manages to come near 305, 10 kind of levels, one can certainly initiate buy. Otherwise, avoid this counter for now. Wait for some consolidation and wait for the new breakout then.
Okay, all right. Let's take another viewer query at this point of time. That is your Anune Iriki is asking the views on Jupiter wagons. He's holding at 600 odd levels and he's asking whether is there any scope it'll recover. He should or should he exit at any upside that is seen. So 600 odd levels he's bought it at, and right now the stock is trading about 390 odd levels. He's seeing a significant loss at this point of time. What should he do, Kunal? Should he wait for some time because the stock has picked up pace in the past 2-3 sessions?
See, really good volume was seen on 21st March, sideways consolidation, and now the counter is on the breakout. That breakout is at around 400 levels. Though I'm not tracking this actively, but just now I saw the chart, it's making actually cup and handle formation also. So I would advise a viewer to initiate a fresh entry onto this counter on the breakout of 400. If the counter manages to go above 400, then with the stop of 385, one can certainly buy this counter. Targets can be 465 to 470. I would again advise at that point in time, exit the newly bought quantity because your old quantity is at very high level. At least this trade will help you to offset some of those losses and then stay invested with this old quantity. That's absolutely fine. We'll probably revisit at that point in time on Moneycontrol again.
Okay. All right. Let's take another viewer query at this point. We have Binay Biswal who's asking the view on Tata Motors. He's been holding the stock at about an average price of about 640 levels. He's asking whether he should hold or book profit at this point. Kunal, what is your view on the counter? We did see that the stock did not react well to its Q4 numbers, but however, in the past 1 month, the stock is doing quite well.
So unfortunately, our buying price was 680 and we are still holding it. And our viewer, actually, I should thank him that, his entry was at the very lower level. In fact, that's very attractive. It's absolutely risk reward attractive counter. With the stop of 640, he can certainly hold on. If the counter manages to cross above 725, I think that's a fresh breakout on the chart. And what's the most attractive on this counter is that in spite of this good numbers, this counter has not reacted much. Counter is down by around 40% from its high levels, consolidating extremely near the support. So yeah, it's a clear thumbs up, stay invested. My personal targets on this are at least around 800 to 825. Let's see how it goes. But first breakout is at 710. Above that, targets are open for 800 levels also. So stay invested on this.
Okay, so you're bullish on the counter, 800 levels, that is what Kunal is eyeing out for. All right, let's take another viewer query at this point. Ratan Kumar Solomon is asking about his view on Garden Reach. Well, the stock has seen a significant run up as well, 30% uptick on the counter. He's saying that he's having some minor profit, so he's asking whether he should hold or accumulate on every dip. Kunal, what is your view on the counter? Garden Reach?
I think the second opinion of this viewer is more logical. Buy on dip can be good strategy. Why to book the profits when the counters are giving us favor? So, the extreme volumes were seen on the past. Even yesterday was a massive gap up and today is a mild continuation of the same. I mean, just think of who will initiate a buy at this elevated level when the counter was up by 14%. So yeah, if you're holding, it's great. Just stay invested. The stop loss on this counter right now is around 2000, though it's 10% away, but that's absolutely fine. Stay invested, buy on dip. I think the targets on this chart are around on the counter around 2550 to 2600. Even we are holding it and we are extremely bullish on this.
Okay, all right. Now let's take another viewer query. That is your Satvika Ranganathan is asking the view on Sri Renuka Sugars at this point. Past 5 days, the stock has seen a good run up, Kunal, about 11% uptick or so on the counter. And today also the stock is doing quite well, 3% uptick. Any target levels, any resistance levels that the viewer should eye out for?
So yeah, the resistance was at around 30.50. In fact, I had also placed the alert, and today morning when we were just the markets opened, we saw the first alert on my screen, which was Renuka itself. But I am now scared because counter has gap up open coming near day's low. It's a clear breakout. Think of initiating by somewhere near 31, not at the elevated level. Stop loss can be 30.50 and the targets can be 35 and 37.5. It's a very short-term trade. nothing to hold for long term because the trend is negative for now. But this can be a good momentum trade to play for next 1 week to 1.5 week.
Okay, all right. Let's take another viewer query. That is your Gurpreet Singh is asking the views on SBI. SBI, I know that you're bullish on the entire PSU banking space, Kunal, but anything that, any levels that you want to point out for State Bank of India?
Absolutely. With the stop of 775, it's a clear buy. The first target is 835, that's short term, and the second target is 875, which is the previous high, which is a swing high of around December 24. So yeah, it's clearly bullish. Just that right now it's consolidating in the sideways with the support of 795. So I think that can be a good level to initiate by with the stop of 775 and the target of 830.
Okay, target of 830 that we need to watch out for SBI. But other than that, Kunal, any particular picks that you want to highlight at this point of time before we let you go?
Absolutely, Lovisha. So first counter is JK paper, which is looking very attractive to me. In fact, couple of days back, this counter was trading near 305, 310 levels. In fact, today it's up by again around 2%. It's at 350 levels. So it's a clear breakout seen with good momentum on the chart. So with the stop of 330, one can initiate a buy and the positional targets can be 375 to 380. The second is HCC, though it's considered to be a penny stock, but it's coming out of consolidation now. Today, the breakout was seen at around 28 during market open itself. We have seen the breakout. So with the stop of around 27, one can go long. The targets can be 31. And the third counter is SW Solar. Now, this counter was in upper circuit for last 2 to 3 days. If the counter comes near 280, that's 280, I think that can be a good level to initiate by with the target of around 325 to 330. So yeah, these are three counters to watch out for next 1 week to 1.5 week time.
Okay, all right. We'll keep a watch on them as well. But with that, we have to let you go, Kunal. And thank you so much for your time. And we hope that we connect with you soon.
Absolutely my pleasure, man. Thank you so much.
All right. Now let's take a quick check of the markets before we move on to our next guest of the show. We have Sensex, which is down about 250 points. So the selling has intensified at this point. Nifty is also down about 62 points, below that 624, 650 odd levels. If you look at some of the sectoral indices, Nifty IT index flat in the red. Bank Nifty index also with about 0.3% cut, which is coming in. And if you look at Nifty Pharma index also with about 0.2% cut. However, what is holding well for the markets, that is your Nifty Metal index continuing its shine to the second day with about more than 0.5% gain coming in for the Nifty Metal index. Other than that, we can see Nifty FMCG also not doing well with about, very 0.1% cut, which is coming in. Nifty Realty also, which was yesterday doing well, today also it has succumbed to the selling pressure and it's giving out about 0.5% downtick at this point. Let's look at broader end of the markets. Mid caps with about 0.3% gain, small caps also with about 0.5% gain. So broader end of the markets continue to remain resilient despite the fall in the headline indices at this point of time. So yes, let's move on to the next guest of the show. We have Kush Gupta, director at SKG Investment and Advisory, joining us. Kush, good morning. If we look at 1 month back, everyone was worried about tariffs, geopolitical tensions, not so great earnings. Right now, the picture seems to be a bit better, but valuations still continue to remain a concern. What do you think? What is this phase of the market at this point of time?
Hi, good morning. Thank you for having me on the show. So yeah, you're right. Past 1 month has been very eventful when it comes to the market. I think all of us have been glued to news more than ever before with tariff wars and Indo-Pak border tensions. Going forward, I feel things are looking up. The reason why markets, in my opinion, will continue to grow forward from here is because India is now offering sort of an oasis. It's an oasis in the world economy right now. Most of the countries are hit from US tariffs and there is a lot of uncertainty. And India historically has, always been a very domestic-led growth story and which is continuing to grow. So from that perspective, I think India will continue to shine and outperform other stock markets. If you also look lately, FII interest has been renewed. FIIs who have largely been sellers for past 1.5 years have also come back. They are also seeing certain green shoots in different pockets. And it's not like a lot has changed, but the fact that investments are relative and amongst all the major economies and emerging markets, India is just proving to be, a much better option. So yeah, from that point of view, provided the ceasefire continues and global tensions, continue to decrease, I think India should continue to do well.
Okay, okay. All right. Let's talk a little bit about broader end of the markets because they have been showing quite a bit of resilience, mid cap and small cap indices, both of them. Anything that you want to point out from there? How are you finding valuations given the earnings so far, and anything that you like from the space?
So valuations, I feel in the mid cap and the small cap space are still very high. Even though small cap space has corrected over 16 odd percent from its from its highest point, if you look at a five year return, small cap index is still given over 33% annualized return, which is exceptional, right? And I don't think any other asset class across the world has given that kind of return. So there is still room for correction there. I wouldn't jump in and start buying immediately in the small cap and mid cap space. It's the large cap space that I feel still certain pockets are showing good valuations. If we talk a little bit on the individual sector side, I feel BFSI, infrastructure, and FMCG consumer durables can outshine. So valuation wise, mid and small, yes, one has to be a little cautious. Large cap space is somewhere we feel, even though slightly stretched, but one can start looking into quality stocks.
Okay, okay. Kush, let me understand what is your earnings takeaway because the street is quite happy with the numbers, largely in line with what it was estimating. But for investors' return expectations in the future, how much should India Inc. grow for the remainder of the year? What is your estimation?
So interesting what you said, investor expectations. I feel investor expectations lately has become a bit too much. I think a lot of value has been created, investor wealth has been generated. So overall investor expectations post-COVID we have seen is always wanting, a red hot India Inc. engine which should just continue to grow. And in longer term, sometimes that does not happen. So India Inc., in my opinion, FY25 has seen a revival of earnings, and there has been overall growth in the earnings. And as we go forward, it should continue. My expectation is growth of somewhere around 8 to 9%. And I think as we get a lot of support from domestic institutions, which always provides a floor to the stock market prices. So investor expectations should trim down a little bit, and with moderate growth, we should see companies doing well.
Okay, okay, all right. I want to understand from a flows perspective also. Earlier, everyone was saying that India is going to be favorable given that earnings are also on par and macroeconomics are also quite doing well at this point. But right now, with US-China trade deal which is fructifying, do you believe that India will still have the relative advantage compared to China going ahead?
Oh, definitely. I think India on a global landscape is very, very well positioned. See, while there is some sort of truce that we are looking at between US and China, we also know that that situation is very fickle. Their trade policies and their tensions, inter-country tensions are always on the brink, while India provides a much more stable platform, which is sort of in a way shielded from global tensions. So India, I think, would always be a great contender to investment funds. China is no longer the only game in the market, and from that view, I feel like whether US-China tensions are at ease or they are at high, I think India has its own independent story to play, and which is led by a huge headroom for growth in almost every sector. So if you look at infrastructure, there is room to grow. If you look at consumption, if you look at financial penetration, almost everywhere, we see a huge part of the country that is still underserved, and that is coming into the formal economic fold. So our play is largely independent of what happens globally, and that is something that is being recognized by the Indian investors and investors abroad. So a very big validation for that is that we've seen FIIs bounce back. But if you think about it, nothing much has changed in past 5 months, right? It's not that the large caps have corrected significantly for the FIIs to come back, or it's not like there have been a lot of major policy changes, except for RBI stance, which has become accommodative now. But in spite of these things, we are seeing FII interest has been renewed. And the reason for that is that somewhere they are also recognizing that India's story is that of an independent nation, and that will, continue to post good numbers in the corporate side.
Okay, okay. Kush, I want to understand from a sectoral perspective, what are you liking? Because you did mention that mid cap and small caps are still overvalued, and large caps also seem a little bit stretched at this point of time. So, what should investors do? Where should they sit on the cash until the volatility is out of the way, or what do you recommend?
From a sectoral point of view, I am liking infra. I think large infra companies will continue to do well. If you look at past 10 years, Modi government has given a massive, relentless push in infrastructural growth. But honestly, irrespective of whichever political parties at the helm, I feel there will be a continued push towards infrastructural growth. We will see airports, ports, roads, highways, power plants being constructed, and in this journey, EPC players and power companies and large infra players like L&T and all of them, I think they will continue to do well. So infra is a space that we are very excited about. Another space that I think is sort of was sleeping and has sort of woken up is the BFSI sector. I think if you look at from Nifty point of view, banking and financial is almost 25 to 26% weightage, and the large banks in the BFSI sector was sort of having sort of a sleepy time in past 18 to 24 months, but that has changed. Largely thanks to the RBI and its policies. I think their goal is very clear. They want to push demand. They want to create surplus, with these banks. They have also decreased the rates, which ensures liquidity towards the banks. So BFSI sector is somewhere we are looking, to invest in. And large banks have been doing well lately, and they should continue to do well.
Okay, okay. Banking usually had that one concern of asset quality and unsecured lending. Would you say that that is something that investors should, keep a watch out on going ahead, or what do you expect?
I think the whole, NPA story that kick-started, 5-7 years ago, where there was asset quality review, and most of the banks were sort of beleaguered with bad asset quality. I think much of that has been taken care of. Also, you have to understand the whole industry has shifted, right? 10 years ago, maybe they were more relaxed in giving out loans, but I think with a very big slap on everybody's wrists, I think the lesson has been learned. And not only they have gotten rid of their bad quality assets. I think going forward we can be more relieved that it will not repeat again. So if an asset book is growing, if a bank's book is growing, one can be assured that there is a very strong focus on not having bad quality assets on the books. So it's the shift in the business model that gives us a big relief. Rather than just getting rid of bad blood, going forward, I think it's very certain that there will be no more big incidents of bad assets on your books.
Okay, okay. And what about the insurance space? Since you mentioned that you do like the BFSI at this point of time, how are you finding valuations for insurance companies? There are some, chatter on the street that the bank insurance channel will be, the constraints on usage of it will be eased going ahead. But from a valuations perspective and growth perspective, how do you see the likes of HDFC Life, SBI Life, all of these counters?
So when it comes to BFSI, whether it is insurance or wealth or any kind of financial penetration, we are very bullish on it. So I feel overall there is still a huge population that is underserved, and as we are migrating from a rural economy into a more urban economy, as There is, people are moving from tier 2 cities to tier 1 cities and tier 3 cities to tier 2 cities. The demand for insurance, the demand for healthcare, the demand for, financial inclusions will continue. And you can see these, if you see any numbers, whether it is UPI digital transaction numbers, whether it is, demat account numbers, whether it is mutual fund numbers, everything on the financial penetration side is growing big time. In April, we saw the largest SIP infusion, right? While it may not be directly related to insurance, but what it's showing to you is that a big section of society is going forward and buying these services. So insurance, again, we are bullish on it. We think that the whole BFSI pocket will continue to do well as the modernization and the urbanization is growing all over the country.
Okay, okay. Kush, since you mentioned that you the favorite spaces that you like, anything that investors should stay on the sidelines for the time being?
So for the time being, I think two sectors is one should be on the sidelines of. I think auto, while autos has its great run lately, I think next year or so is probably very difficult for auto sector. We've seen sluggish number in the auto space. Auto sales grew by only 6.5% in FY25. Vis-a-vis the growth was 10% in FY24. I think the only silver lining was the SUV sales, but then again, US tariffs is also, they also want to push their companies, coming into India and so on and so forth. So Indian companies will find a little difficulty over there. Also, one interesting, my personal theory is that it's the EV space, that is becoming a bit of a challenge for Indian auto companies. While there is a huge push by the government to, promote EV all over the country, and most of the big auto companies have, included EV vehicles in their product mix. But it is the penetration and the acceptability in the public when it comes to EV that I think is taking a little bit, more time. This year we saw, I think, about only 8% growth in the EV vehicles, and I think last year it was about 7%. So it hasn't grown so significantly. So that is also a bit challenging for the auto companies. And apart from auto companies, I feel IT is also something that, personally we are on the sidelines and waiting to see what happens. It's the only sector in India that is not so self-reliant, so to speak, and very dependent upon US tariffs, and US being the biggest customer for most, IT companies. We could see a slowdown in US. I think there has a lot of recession talk has been there when it comes to US. I think we're far away from recession, but yes, slowdown in the US economy is probably on the cards. And if that happens, then IT companies will take a little bit of a backseat. And if I may, IT is also, I personally think IT is at a cusp of a very, very big revolution with AI and machine learning coming in. And it is yet to see how Indian IT space, accommodates to that. How well are we capable to serve AI and machine learning and that pillar of IT and tech. So we will also have to create infrastructure for that. There will be a lot of skilling required, to enter that space, and we will. It's yet to be seen if Indian IT companies will be able to do that or not.
Okay, okay. IT and auto, that we need to remain cautious at this point of time. That's the takeaway, Kush. But with that, we have to let you, Kush. Thank you so much for your time, and we hope that we connect with you soon.
Thank you very much.
All right, let's take a quick check of the markets because they have extended the sell-off. If you look at Sensex, it is down about 400 points, and Nifty is also below that 24,600 mark. So yes, that is where we are at. However, the market breadth still is in the favor of advances. 2:1 advance decline ratio. That is what we are standing at. If you look at some of the sectoral indices, which is doing good and providing some cushion to this downside, that is your Nifty Metal Index with about 0.3% gains. Other than that, we can see Nifty Media Index also doing well with 0.5% gains or so. And Nifty Auto Index, like we were talking about earlier, it is flat in the green. at this point of time. Let's look at some of the other sectoral indices which is contributing to the losses. That is your Bank Nifty index with 0.5% cut that is coming in. Nifty Pharma index with about 0.4% cut. Nifty Realty index also not doing well with nearly 0.5% cut. On the other hand, the broader end of the markets still continue to remain resilient. The excitement is still continuing in the broader, in the mid cap and the small cap indices. Mid caps with about 0.2% gains and small caps also with about 0.5% gains coming in. So with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.